All right, ready to jump into this deep dive. We're tackling ThaiBev's 2024 annual report. They're a big name in Southeast Asian beverages aiming for what they call sustainable growth to passion 2030. But what's the real story? What does the report actually reveal about where they stand? Well, we've got a whole stack of sources to help us figure that out. We've got the full annual report, of course, plus a management discussion and analysis. And to top it off, we've got a presentation deck, very visual, lots of interesting stuff in there. So are you ready to dig in and pull out those key insights?
Absolutely. I think with these three sources, we can get a really good picture of this company.
Okay, fantastic. So let's start with the basics, right? Every business is built on its core offerings. So let's unpack ThaiBev's different business segments. The report shows they're working across four main areas: spirits, beer, non-alcoholic beverages, and food. It's a real mix, wouldn't you say?
Yeah, it's a pretty diverse portfolio, which can be a smart move. It allows them to tap into different consumer trends and maybe ride out economic storms a little better. Their beer business, for example, saw a 2.4% jump in sales revenue. They actually hit 126,332 million baht, which is pretty impressive. The report attributes this to a few factors: a rebound in tourism, warmer weather boosting sales, and some pretty effective marketing campaigns, especially for their flagship Chang brand.
Yeah, they're really leaning into those premium trends too, like their Chang unpasteurized, the one in those sleek aluminum bottles, trying to capture that higher end market. But what about their non-alcoholic beverage segment? That's a huge market, especially in Southeast Asia.
Oh, absolutely. And ThaiBev is definitely making moves there. They saw a really solid 4.2% growth in that segment, reaching 65,802 million baht in revenue. A lot of that growth is connected to their consolidation of Fraser and Neave, or F&N as it's often called. They upped their stake to almost 70%, which gives them a massive presence in Southeast Asia's non-alcoholic beverage market, and the dairy market as well, which is significant.
Wow, consolidating F&N like that. It's a major power play, wouldn't you say? It makes you wonder if this is a long-term win for ThaiBev, or could it create some unexpected challenges down the line?
It's a really good question, and it's definitely something to keep an eye on. Consolidating a business of that size always comes with a certain level of complexity and potential unknowns. Now, one thing I found interesting is that the report doesn't actually give us specific revenue figures for their spirits business.
Yeah, why so quiet on that front? We know spirits are a big part of their portfolio, and they've been making moves, haven't they? Didn't they recently acquire a premium spirits brand to broaden their offerings?
Yeah, they did, and that seems to be a recurring theme: acquisitions as a part of their growth strategy. We see that in their food segment as well. They actually saw a 5.5% sales increase there, and a lot of that was driven by their acquisition of Cocolin Holdings Berhad, which, by the way, is a strategic move into the snack and confectionery market. Seems they're paying attention to those evolving consumer tastes, trying to capture new markets.
So it's like they're fortifying their core brands while also branching out into these new territories and product categories, playing both offense and defense at the same time. But to really understand how healthy this beverage empire is, we need to look at their financials, right? And looking at the report, it paints, well, a bit of a mixed picture.
Yeah, mixed picture is a good way to put it. We see some impressive gains in certain areas, but then there are also some areas that raise questions, make you want to dig a little deeper. I think to really understand it, we have to connect these numbers to the bigger picture of ThaiBev's strategy, their goals for growth, profitability, and of course, keeping those shareholders happy. It all plays a part.
All right, so let's break down those numbers, starting with the top line. Revenue. Overall, they had a 2.3% year-over-year increase, reaching 344,059 million baht. Not bad, but it is a little slower than the previous year's growth, which is worth noting.
Yeah, that slowdown definitely catches your eye. It could be a sign of those headwinds we talked about earlier, those economic factors that can impact any business. But before we jump to conclusions, let's zoom in on profitability. Their beer business, for example, saw a 3.9% increase in net profit, hitting 5,221 million baht, which is pretty healthy. And their non-alcoholic beverage segment was even stronger, with a 9.3% rise, reaching 5,934 million baht.
Okay, those are some nice margins. But what about their spirits business? Remember the report mentioned a decrease in net profit there. What's the story there? Why the decline?
Honestly, it's a bit of a mystery. The report doesn't really dive into the specifics of what drove that profit decline in the spirits segment. It's something to keep in mind as we analyze their overall performance. Definitely a piece of the puzzle we need to figure out.
All right, detective mode activated. So we've got this interesting situation with their spirits business. But shifting gears a bit, let's look at their balance sheet. One thing that jumps out is a significant drop in total equity.
Yeah, it's down by 26.8%, landing at 229,055 million baht. That's a big shift. And it's largely due to how they had to account for the F&N consolidation. It was treated as what's called a business combination under common control. Essentially, the ownership structure didn't change drastically, but the way it's reflected on the balance sheet did.
So it's more of an accounting thing than a sign of actual financial trouble.
Exactly. It doesn't necessarily mean something negative is happening, but it definitely adds a layer of complexity when you're trying to interpret their balance sheet.
Okay, good to keep in mind. Now, we can't forget about cash flow, right? Often considered the lifeblood of any business. And on that front, ThaiBev seems to be doing pretty well. Their cash flow from operating activities, the cash generated from their core business, reached a robust 38,079 million baht.
That's definitely a positive sign, no question about it. Strong cash flow from operations means their core business is doing what it's supposed to do, generating cash. And that gives them flexibility, to invest in growth, to pay down debt, to reward their shareholders.
Speaking of which, that brings us to an interesting point, doesn't it? We've got this big equity shift linked to the F&N deal. And we know they're focused on generating cash, but does it all add up to a picture of financial strength? Or is there something more we need to uncover?
That's the million-dollar question, and that's exactly what we'll be exploring in the next part of our deep dive. We'll really delve into those financial statements, the income statement, balance sheet, cash flow statement, and those all-important free cash flows. We'll dissect it all.
Sounds good to me. I'm ready to crunch some numbers and see what story they tell. Stick with us, folks. We'll be right back after a short break.
Okay, so let's really roll up our sleeves and dig into these financials. We've got a whole stack of numbers to unpack here, and I think the best place to start is with the income statement. It gives us that breakdown of revenues and expenses, which ultimately tells us how profitable ThaiBev really is.
Okay, so what's the income statement telling us? We already know revenue was up 2.3% overall. But what was driving that growth? Was it organic growth from their existing businesses, or did those acquisitions play a big role?
It was a bit both, actually. The management discussion and analysis breaks it down pretty nicely. It says that sales revenue growth was a combination of organic growth and contributions from those strategic acquisitions.
Smart move. Diversifying their revenue streams like that can help them weather those economic ups and downs, right? So let's break it down a little further. We know beer and non-alcoholic beverages were doing well, but what about spirits and that new food segment? How did they perform?
Well, their spirits business actually saw a slight revenue increase, up 0.8%. But remember that dip in profitability we talked about earlier?
Right.
The report doesn't really go into detail about what caused that decline in the spirits segment, which is a little frustrating.
Yeah, it's like a puzzle with a missing piece. Makes you wonder what factors might be at play there. What about their food business? That's a relatively new venture for them, isn't it?
It is, and it seems like it's gaining some traction. They achieved a 5.5% increase in sales revenue from their food segment, primarily driven by that acquisition of Coco Lind Holdings Berhad thing.
So their move into snacks and confectionery seems to be paying off, at least on the revenue side. Okay, so we've got a good grasp on their revenue picture now. But let's talk about the bottom line, profitability. What's the overall story there?
Well, their net profit came in at 28,799 million birka, which is actually a tiny decrease, just 0.1% compared to the previous year.
Wait, a decrease. But their beer and non-alcoholic beverage segments were doing so well with profit growth in both. So what's dragging down their overall profit?
The culprit seems to be their food business. Integrating a newly acquired business, especially one like Coco Lind, can sometimes create some short-term hiccups in profitability. Think about it. You've got upfront costs, integration challenges, and you might need to adjust pricing strategies, things like that.
Yeah, that makes sense. It's like when you're renovating a house. You often have unexpected expenses and delays, but once it's all done, the value is there. So maybe this dip in profit is just temporary while they work on integrating Coco Land into their operations.
Yeah, I think that's a very real possibility. Sometimes you have to look beyond those immediate numbers and consider the long-term potential, especially when you're dealing with acquisitions and new ventures like this.
Right, it's about the long game. Okay, so let's move on to the balance sheet now. It gives us a snapshot of their assets, liabilities, and equity at a specific moment in time. We already talked about that big drop in total equity. But what else should we be paying attention to on their balance sheet?
Well, one thing that stands out to me is their debt levels. Managing debt is crucial for any company's financial health. And ThaiBev does carry a significant amount of debt on its books.
How much debt are we talking about here?
Their total borrowings, which includes both short-term and long-term debt, stood at 234,226 million baht at the end of the fiscal year.
Okay, that's a pretty hefty sum. But isn't debt a normal part of doing business? Companies often use it to fuel their growth, right?
Oh, absolutely. Debt can be a very valuable tool, especially in a capital-intensive industry like the beverage industry. But it's all about striking that right balance. Too much debt can strain a company's cash flow and limit their ability to make strategic moves down the line. So it's important to analyze their ability to manage that debt load effectively.
Okay, so how do we do that? What should we be looking at to gauge their debt management?
Well, one key metric is the debt-to-equity ratio. It compares a company's total debt to its total equity. Basically, it tells us how much debt they're using to finance their assets compared to how much is funded by shareholders' equity.
So what's ThaiBev's debt-to-equity ratio looking like after the F&N consolidation and all those equity adjustments?
Their debt-to-equity ratio is sitting slightly above 1, meaning their total debt is a bit higher than their total equity right now.
More debt than equity. Should we
Yeah.
be worried?
It's not necessarily a red flag in itself. We have to consider industry norms and the company's specific circumstances. In ThaiBev's case, they're operating in an industry where debt financing is pretty common. But it is something to keep an eye on, especially considering those recent acquisitions and their ambitious growth plans.
All right, we'll put that on our watch list. Now let's shift gears to cash flow, arguably the most important financial statement. It shows us the actual cash coming in and going out of the business, right?
Yeah, cash flow is king, as the saying goes. And ThaiBev's cash flow statement has some interesting things to tell us. Their cash flow from operating activities, which is basically the cash generated from their core business operations, was quite strong. It reached 38,079 million baht.
So their main business activities are generating a good amount of cash. That's a good sign, right?
Absolutely, it's a very healthy sign. It means they have the cash flow to repay debt, make investments, and pay those dividends to shareholders.
Okay, so their core business is a cash-generating machine. But they've also been investing quite heavily in property, plant, and equipment, and of course those acquisitions we talked about. That's got to be putting a dent in their cash flow, right?
You're right, those investing activities did use up a significant chunk of their cash. And that brings us to a very important concept. Free cash flow. It's the cash that's left over after accounting for those big investments in long-term assets.
Ah, so it's like your fun money after you paid all the bills and set aside some for savings.
Exactly. That's a great analogy. It's the cash ThaiBev has available to do things like reduce their debt, pay dividends, or even buy back shares.
So what's the verdict on their free cash flow? Are they generating enough to keep those dividends coming and make other strategic moves?
Well, their free cash flow came in at roughly 11,779 million baht, which is a decent figure, but it is notably lower than their cash flow from operations, primarily because of those capital expenditures, those investments they're making.
Makes sense. Investing for growth often means you have less free cash flow in the short term. But the hope is that those investments will ultimately pay off down the road.
Exactly. It's all about finding that balance between investing for the future and maintaining financial stability in the present.
Right, the classic balancing act. Okay, so we've covered the income statement, balance sheet, and cash flow statement. What's next on our financial statement adventure?
Well, we can't forget about the financial notes. They might seem like just fine print, but they contain really crucial details and context. They can help us understand the nuances of their financial position. Think of them as the footnotes that really explain the bigger story.
Okay, let's zoom in on those notes then. What kind of insights can we glean from them? What are they telling us?
The financial notes often give us information about things like companies' accounting policies, any significant events that happened, and potential risks they might be facing. And in ThaiBev's case, there are a few things in the notes that stand out. For example, they have a significant amount of what's called goodwill on their balance sheet.
Goodwill. Remind me what that is again.
Okay, so imagine you buy a company for more than the value of its tangible assets. Let's say the company owns factories, equipment, inventory, all that stuff, worth 100 million baht. But you pay 150 million baht to acquire it, that extra 50 million baht you paid. That's often recorded as goodwill.
Ah, so it's like paying a premium for something intangible, right? Like the company's brand reputation, customer relationships, maybe their future potential, things like that.
You got it. And because of all of ThaiBev's recent acquisitions, their goodwill has increased quite a bit. It's a substantial portion of their total assets now.
Interesting. So is that something investors should be concerned about? That large amount of goodwill on their balance sheet?
It's definitely something to be aware of, because goodwill, unlike some other assets, isn't easily converted to cash. And if the value of those acquired businesses declines, the company might have to write down that goodwill, which can have an impact on their financial performance down the line.
Okay, so even though their cash flow is strong and they're paying dividends, that large amount of goodwill adds a layer of complexity we need to factor in.
Exactly. It highlights how important it is to look at the complete picture, not just focus on a single metric or financial statement. We need to combine these numbers with a deeper understanding of their industry, their competition, and their overall strategic initiatives. That's how we get the full story.
All right, so we've analyzed their different business segments, we've crunched the numbers from their financial statements, and we've even delved into those crucial financial notes. What's the next step in our deep dive? What else do we need to explore?
I think in the final part, we should step back a bit and look at ThaiBev's business moving forward. We should talk about their Passion 2030 roadmap, those elusive share buybacks we were wondering about, and whether their overall strategy seems like it's positioned for sustainable success.
Sounds like a plan. I'm eager to hear your expert take on what the future holds for ThaiBev. Stay tuned, everyone. We'll be right back. Okay, so we've really dug deep into ThaiBev's operations, their financials, the whole picture. But now let's try to answer the big question. What's next for this beverage giant? They've got this ambitious plan, their Passion 2030 roadmap, but is it all just marketing hype? Or is there real substance behind their vision for the future?
It's a good question, and I think the answer lies somewhere in between marketing and reality. Remember, their report emphasized two main pillars: reach competitively and digital for growth. And I think these give us some clues about how they're approaching the future.
Okay, so let's unpack those a bit. Reach competitively, it sounds like something you'd see on a motivational poster, right?
Yeah.
But what does it actually mean for ThaiBev in practical terms?
Well, it's about maximizing their presence across different channels and doing it as efficiently as possible. Think distribution networks, strategic partnerships, really targeted marketing campaigns. They want to get their products in front of as many consumers as possible, but they also need to keep costs under control.
Makes sense, but the beverage market is crowded, right?
Mm-hmm.
How do they plan to stand out and actually grab consumer attention? It's not enough to just be there. They need to be compelling.
That's where digital for growth comes into play. They're really banking on technology to enhance their competitiveness and streamline their operations. Think e-commerce platforms, sophisticated data analytics, even things like those smart vending machines you see popping up everywhere.
It sounds like they're embracing the whole digital revolution. But going digital just for the sake of it isn't a guaranteed win, is it? It's all about how effectively they leverage those technologies and avoid creating unnecessary complexity.
Exactly, you hit the nail on the head. It's not about blindly adopting every new gadget or platform. It's about strategic implementation and using data-driven insights to make smarter business decisions.
Okay, so they're focusing on internal initiatives, those reach competitively, and digital for growth strategies. But we also have to consider those external forces that can impact any business, like the global economy. No business operates in a vacuum, right?
Right. Those external factors are always at play.
Economic slowdowns, inflation, those supply chain issues we keep hearing about, all of these things can derail even the most well-thought-out plans. So how resilient is ThaiBev to those kinds of shocks?
It's always tough to predict the future with complete certainty, but I think their diversified portfolio gives them some level of protection. They're spread across different beverage categories and different geographic markets, so if one area takes a hit, they can potentially lean on their strengths in other areas to balance things out.
So if one region's economy slows down, they can rely on their performance in other markets. That diversification helps them weather the storm a bit, right?
Exactly. It spreads the risk.
But let's not forget about competition. The beverage industry is incredibly competitive. You've got big global players, you've got scrappy startups, everyone's fighting for market share. So how can ThaiBev hold their ground and maintain their competitive edge in that kind of environment?
It's a constant battle, no doubt about it. But they do have some advantages, deep roots in Southeast Asia, well-established brands, and a very extensive distribution network.
Okay, so they've got a solid foundation.
But to stay ahead, they'll need to keep innovating, adapt to those ever-changing consumer preferences, and they might even need to make a few more strategic acquisitions along the way to expand their reach even further.
It's like playing chess, isn't it? Anticipating the competition's moves and making the right moves to stay one step ahead.
Exactly, it's a strategic game.
Now, let's circle back to something we've been wondering about, those share buybacks, or rather the lack thereof. The report was oddly silent on that front, wasn't it? What are your thoughts on that?
Yeah, it is a bit strange. Share buybacks can be a really effective way for companies to reward their shareholders, especially if they believe their stock is undervalued. And ThaiBev has a history of doing buybacks. So their silence in this particular report does raise some eyebrows.
Does it mean they're changing their approach to capital allocation? Maybe those Passion 2030 investments are taking priority over returning cash to shareholders directly through buybacks.
It's certainly a possibility. That roadmap requires a significant amount of capital, and they might be choosing to prioritize funding those initiatives. Acquisitions, digital transformation, sustainability projects, all of that costs money.
But their cash flow is pretty healthy, right? Couldn't they manage both growth investments and share buybacks?
They could, but maybe they're being a bit more cautious, holding back some capital in light of those economic uncertainties we discussed earlier.
Okay, so maybe it's a sign of prudent financial management, trying to be prepared for whatever comes next.
Exactly, and I think only time will tell how their capital allocation strategy plays out. We'll have to watch their future reports closely for more clues.
Right, we'll keep an eye on that.
Yeah.
Now let's touch on sustainability for a moment. The report highlighted their commitments to water replenishment and sustainable sourcing. But are these genuine efforts, or is it just a bit of greenwashing to boost their image?
It's a fair question, and there's always a bit of skepticism when companies make these kinds of pledges. It's easy to talk the talk, but the real test is in their actions. ThaiBev has set some specific targets, like aiming for 100% water replenishment by 2040, so we'll need to monitor their progress and see if they're actually walking the walk.
So it all comes down to transparency and accountability, right? They need to back up those claims with real data and show measurable results.
Absolutely. Consumers are becoming much more discerning. They want to see companies taking concrete action, not just making empty promises.
Okay, so we've covered a lot of ground in this deep dive. We've looked at their strategies, their financial performance, their decisions about capital allocation, their sustainability commitments. Taking all of that into account, what's your overall assessment of ThaiBev's future? Are you optimistic?
I'd say I'm cautiously optimistic. They have a lot going for them, that's for sure. A strong foundation in a growing market, a diverse portfolio of products, and healthy cash flow.
So they're in a good position, but there are challenges.
But there are also challenges, yes. Intense competition, economic uncertainties on the horizon, and the ongoing integration of those recent acquisitions.
So they're juggling opportunities and risks, navigating a complex business landscape.
Exactly. And I think their success will ultimately hinge on how well they execute their strategy, how effectively they adapt to change, and how they build a business that's both profitable and sustainable in the long run.
Right, it's a balancing act. Well, we've certainly given our listeners a lot to think about today, haven't we?
I think so.
We've explored ThaiBev's business from multiple angles, analyzed their financials, and delved into their plans for the future. Now it's up to our listeners to draw their own conclusions, to connect the dots, analyze the trends, and form their own informed perspectives. The business world is constantly evolving, and companies like ThaiBev are at the forefront of that change. So stay curious, stay engaged, and keep exploring. That's all the time we have for today, but thank you for joining us on this deep dive into ThaiBev's 2024 annual report. Until next time, happy investing, everyone.